Guys, February 18, 2019, markets are closed today. I'm having a little bit of fun here. I want to know your opinion. March 1st is almost here, so what do you think? Guys, seriously, deal or no deal? Deal or no deal with China? They're saying Chinese are flying back to Washington, D.C. on the 26th, 27th, 28th. They're going to renegotiate stuff again. They're going to talk about it. Now, every time they talk about the Chinese deal, what do they say? Oh, everything is looking so good. Everything is just going well. Guys, let's just be 100% real. Please type in your answer whether you think deal or no deal. I'm about to show you exactly what we think about these deal or no deal situations. So type in your answer right now. Take 2 seconds. 1, 2. Let's go. Okay, here's our view. Tariffs and trade wars are like divorce cases, guys, and child custody cases. I mean, they could drag out for a very long time. I mean, some of you guys, unfortunately or fortunately, might have been through a divorce or two. I mean, you know how that goes. I mean, that stuff does not get solved overnight. So historically, however, after implementation, tariffs never last long. Remember the Reagan administration? We placed some tariffs on the Japanese imports into the United States. Some crazy stuff. Well, they didn't last very long. After about 2 years of existence, they went out of style quick. So considering the fact that we're in the second year of trade talks and negotiations, by the time all's said and done, guess what we think is going to take place? There's going to be no tariffs. By the end of 2019, I think everything's going to come down. They're going to drag it out for as long as possible, and there will be no tariffs at the end. Now, why? The main reason we believe that is because the economic data worldwide keeps deteriorating. By the end of 2019, global slowdown could get significantly worse. So tariffs would hurt all the parties involved. The United States can't afford it. China can't afford it. And don't disregard the most important component of the decision-making over the upcoming year or two. The election is getting too close. So Trump will not take any chances of hurting his prospects of re-election. He does not need tanking stock markets. As a matter of fact, if you're watching the press conference on Thursday, which was the Valentine's Day on February 14th, I mean, this guy, this is the only president that I am aware of that likes to talk so much about the stock market. I mean, his prediction for the stock market, it's fixing to go to the moon. It's fixing to go to all-time highs. Now, of course, he wasn't saying that when the markets were dropping in October, November, December, right? He had no comments at that time. All he could do was just blame the Fed for raising the interest rates. I mean, he almost fired poor Powell like what? 13 times? 21 times? I don't know. But here's the deal. He cannot afford to lose any more votes. He already shown us that he's concerned about it because he clearly avoided the second government shutdown just a few days ago. So, look, he doesn't need the tanking stock market. It does not mean it's not going to tank. And he certainly doesn't need the angry farmers in the Midwest that has been impacted probably more than anybody else by these trade talk negotiations. So he does not need all these negative aspects associated with the trade deal not coming to an end by the end of 2019 in a positive type of resolution. He doesn't need any negativity that could cost him any votes going from here. So in short, the longer the negotiations drag out, the smaller the probability of any tariffs. So we're not expecting a deal on March 1st. It's just going to be a simple reschedule. So you may be wondering, well, how then the markets are going to react? And we're going to get to that in just a second. So if there is no deal on March 1st, would that actually cause the market to drop? The simple answer is no. Look, it's old news, okay? And now you may be thinking, okay, well, that makes sense. I have been looking at the charts, Leonardo, and they look so bullish. Man, these charts are looking so bullish. I mean, just look at this. Wow. From here all the way to here, man, it just keeps going higher. And now we're above the orange line. And look at this accumulation. Leonardo, I took your chart, Court, man. Look at this accumulation. Man, that looks good. Oh boy, this is so bullish. Guys, there's no, looking at this chart, I mean, we're just heading higher. Well, Leonardo, you said a few days ago, Jesus, we were about to go for a correction, so what's going on? You know, everyone is saying that we're heading to all-time highs again. I know. They may be high. That's why they're saying that. Do you remember what the same people were saying in August and September 2018? Well, let me remind you. Look, guys, when you see a chart like this, which is, by the way, September 20th, 2018, S&P 500 was setting an all-time high. And everybody kept saying what? Oh, S&P 3000, S&P 3100, 3200, 3500. Okay, well, what happened in October? I mean, we saw this coming, guys. We said, look, the divergences, the charts are pointing to a drop. The 13 markets move formula was pointing to a drop, so here we are. October 2018 happened. This is what happened. So was it easy to be bullish over here when the chart looked like this? Of course. I mean, it looks beautiful. Now, how about here? With people that were bullish right here, were they saying, oh, the market's about to reverse and go lower? Of course not. Okay? And then what about December 2018, right? So the market crashes. We pointed out in the Market Move 666 video saying, hey, this crazy move lower is about to happen. And we nailed it. And, you know, what were people doing right around here? When S&P 500 was hitting close to the 2300 level, what were they saying? Oh, the world is going to come to an end. The markets are going to crash. 50% drop, all that stuff, okay? So it's easy to be a bear when you see this, right? But here's the ultimate truth. I mean, it's a very simple fact. When things look very bearish, what happens? As a human being, it's very easy to be bearish. When things look very bullish, it's easy to be bullish. But unfortunately, it's not a great strategy. It doesn't make you any money. So clearly it was easy to be a bear on December 24th when the markets were falling. But what did we say? We said, hold on. The market could bounce at any moment. And a couple of days after that, we posted a video saying that, look, the market is about to experience a great bull rally. And partially, here's the reason why. And for the purpose of this video, we're not going through all the reasons, but I'd like to point something that we're observing right now, which is exactly the opposite of what we observed on December 24th. And if you're curious specifically what it was, then please find the video on our channel that's called 59K to 114K, which was a live trading video of me trading on December 24th, 2018. So it'll give you all the details on that. But at some point towards the end of the video, I specifically point out to a divergence between the markets and the FANG stocks. And to be more specific, this is what I was observing on December 24th, and that was one of the ingredients. Now, notice I'm not saying that was it. This is why I'm saying, guys, this was one of the components that made us bullish on the markets as everybody was calling for a further crash. So this is what we observed. This is actually just a few minutes before the close. Actually, it was probably like 3:59, 4 p.m. Actually, it wasn't 3:59, 4 p.m. because the markets closed early on December 24th. So they were closing at 1 p.m. So it was right at the close. Notice this. What is NASDAQ doing? NASDAQ is hitting the lows of the day, December 24th. S&P 500, what is it doing? Hitting the lows of the day. What is Amazon doing? Well, hold on. The low of the day on Amazon that day was 1307. Well, hold on. It's like 1340 level. So $40 off the lows. Not bad. Considering the rest of the indices and everything else is crashing, that's pretty good. So we got NASDAQ dropping. We got S&P 500 up. We got Amazon holding nicely way off the lows of the day. Guys, this is divergence between the FANG stocks and the indices. What does that mean? Well, that was a part of the reason why we said, hold on. We shouldn't be holding these Amazon puts any longer. We should get out. And as you know, what happened on the 26th? What happened? The market started to go higher. And then we alerted all of our subscribers to get on the call side. We posted the video saying, look, the markets are about to go higher. And we specifically pointed out on the charts why. We actually compared to an environment dated back to February 9th, 2018, and compared the environment that's exactly coincided with what the charts did shortly after December 24th. Now, this is what was happening in September, and this is exactly how the chart looks now. So after 2 months of the markets moving higher right now, it's easy to be a bull. Like, it's easy. All you see is just the markets just keep going higher and higher and higher. I mean, look what happened on February 15, 2019. The markets were up big on a Friday. I mean, the Dow was up 444 points. All you could see on your screen is pretty much everything in the green besides what? Guys, besides the FANG stocks. So almost 2 months after the markets are going higher, what do we see? Now we see a case of a bearish divergence between the markets and what? The FANG stocks. All right, so now this is what we got. We got NASDAQ moving higher. Got S&P 500 moving higher. What is Amazon doing? Whoa. It's going lower? Hold on. The markets are up 440 points. NASDAQ is up 40 points. Amazon is dropping? You're going to say, what's the big deal? Okay, I mean, Amazon drops here and there. Okay, guys, this is the big deal. Tell me if you see anything wrong with this picture right here. Netflix, down. Apple, down. Google, down. Amazon, down. Dow Jones up 440 points. S&P 500 up. NASDAQ up. Actually, I took this picture earlier, so the numbers were actually much greater. But the idea is this. Major markets are moving higher while all the FANG stocks are dropping. So what is wrong with this picture? Guys, this is a clear divergence that while the markets are moving higher, the leadership, the leading group that actually took the markets to all-time highs each and every time for the last 10 years, what is it doing? It's not moving higher. So you may say, what is the big deal with this? Well, the big deal is such that without leadership, without clear leadership, the markets are going to have a very hard time moving higher from here. So by now I have given you guys enough clues. Let me ask you a couple of questions here. Let's see if you can figure this out. Let's see if you can figure the answer to this question right here. And here it is. -5, -7, and -3. What do these numbers represent? I'll give you 2 seconds. -5, -7, -3. I've given you enough clues. What could these numbers actually represent? Well, here's the answer. S&P 500. The high was established in September 2019, roughly at 2940 intraday. It closed on February 15th, roughly at 2775. I didn't put any decimals or, it's not down to a point. This is just a rough approximation to show you the big picture, guys. Okay? So it's roughly 165 points lower from its all-time highs, which represents roughly 5.6% below all-time highs. NASDAQ, all-time high roughly at about 8,100. Now it's 7,470. 630 points off the highs, represent about 7-8% below the highs. Dow Jones, 26.7, roughly all-time high. Now currently, as of February 15th, at 25.9. 800 points on the all-time highs, roughly representing 3% below all-time highs. So if we're to average these out, we're getting roughly that the major indexes are down 5% off the highs. Now, this is absolutely insane because we were just down about 20-25% when, like, less than 60 days ago. I mean, this is insane. This only happened like maybe a few times in the United States history of the stock market. So this is really cool. Now, let's see if you can figure out the answer to the next question. Minus 21, minus 17, minus 26, minus 24, and minus 13. What do you think these numbers represent? Come on, guys, I've given you enough clues. I know you know the answer to this. Well, here it is. Amazon, all-time high, 2,050 bucks. Actually, it went to like 2,054 or some intraday, but there it is. Currently trading at 1607 as of the close of the market on February 15th, which is 443 points under its all-time high, representing a difference of 21, almost 22% off its all-time high. Netflix, all-time high 428, currently 356, 72 points under all-time high, representing 17% off the highs. Apple, all-time high 232, current 170, off 62 points, representing almost a 27% below its all-time high. Facebook 215, 162, minus 53 points, representing that almost a 25% below all-time high. Google 1290, 1119, minus 171, 13.2%. So Google looks like the strongest stock among all the FANGs right now. But the point is this: FANG stocks are 20% plus off the highs. So if we run the numbers actual in the financials, you will get similar results. So the markets are down in general 5% off the highs. But the best of breed, world-changing stocks that has been the leaders over the last 10 years, driving the markets to their high levels again and again, they're now down on average over 20%. What is wrong with this picture? Guys, the question is, why aren't the institutional investors buying the best stocks? Especially when the markets are so apparently bullish. So when you're looking at these charts, guys, oftentimes you're just paying attention to the price action. Oh man, the market is up 400 points. The market is doing this. Sometimes it really pays to pay attention between the lines. If the markets are so bullish, why aren't the institutional investors buying the best stocks? Well, there's a couple of answers to that. One is, well, they're not fond of growth stocks right now. All of these FANG stocks, they're growth stocks, right? So maybe they're just taking money out of the growth stocks and they're putting all the stocks that maybe pay a dividend, that look a little safer or whatever. But the question of the day is this: deal or no deal without solid leadership in the market? Can the markets hit all-time high? Can the markets grow without the growth stocks continuing to grow in their prices? Now, on February 24th, it will be 2 months of the markets going consistently higher. Let's try to take a look at this situation from the standpoint of probabilities. What has changed in the last 2 months? I mean, everybody was screaming on December 24th, end of the world, stock market crash. And now, we're going to all-time highs. Get on board. So, here's the question I have for you. Okay, if we're going to all-time highs, what is the catalyst? Because we've taken a look at the trade deal. It's not going to happen. So that should not get the markets to all-time high. I think we can get a rather muted reaction here. Earnings season? Well, considering that the expectations have been lowered and a lot of the stocks are beating the earnings expectations, we're seeing some interesting reactions where a majority of them are falling first and then they're buying the dip. The issue with that is that they're not going substantially higher. They're just barely maintaining their levels. And considering the earnings season is almost done, you cannot really use that as a catalyst for the market to hit all-time highs. Basically, what we have is a situation where we have an absence of catalyst. If we don't have a catalyst to move higher or lower, then we have a high probability of continuation of sideways action. Now, if we actually analyze the charts, if we analyze some of the divergences that I have shown you guys in this video, then a pullback from temporary level could be very real. And especially for all the people that were buying the markets at the end of December or early January, they're going to take some profits. We're hitting some key levels here. So here are the key takeaways, guys. Unless institutional investors begin to buy FANG stocks and banking stocks, we're not going to all-time highs. And considering where we are on the charts and the divergences between the markets and the FANG stocks, I think we have exactly the opposite of the situation that we had on December 24th, where we had divergences between the FANG stocks and the market. And in that case, it was a bullish divergency. And now I think what we're witnessing is a bearish divergency. So we could be a day or just days or maybe just a couple of weeks from a potential drop. And ultimately, this sideways trend is going to break. And I don't believe it's going to break to the upside, at least not short term. I think we're destined for a short-term pullback. Now, I know you will say, well, Leonardo, you posted the video on the 13th, and yes, the market did drop the next day, but then on Friday it went higher. Guys, I want to remind you of a situation that took place in December. Very similar circumstances. The markets were expecting a deal with China. And what were the markets doing in the expectation of a deal with China? They were going higher. And then when the news came out that there's no essential progress, what happened? Well, the markets dropped. Not saying that no deal in China is going to cause the market to drop, but I think considering the probabilities of where the market has been and how far it has gone substantially in a very short amount of time, it would be unreasonable to expect for the market to continue rallying in such a fashion that it has been rallying over the last 45 to 55 days. So it makes sense that without further catalyst, the rally could easily come to a pause. And if that is the case, then the risk reward is getting more interesting on the put side. Guys, if you're trying to learn more about trading options, stocks, take advantage of the links below this video. Take advantage of the chart course, 13 markets move course. If you're striving to be a better trader, we got some great information that can help you. Take advantage of it. Make this year your best trading year ever. Guys, thanks for watching. I'll catch you on the next video.